EU countries are unlikely to be adopting Bitcoin as a reserve asset anytime soon. Binance is in trouble in France. The world's largest sovereign wealth fund has significant indirect Bitcoin exposure. This is your weekly crypto news roundup. Talks of countries holding Bitcoin as a reserve asset has increased in the past few months as President Donald Trump has signaled support for such a move in the US. Over the past few weeks, these talks had also emerged in Europe as Czech National Governor Aleš Miko expressed openness to the idea. But European Central Bank President Christine Lagarde has dampened any such hopes, arguing that Bitcoin does not check the ECB General Council's boxes of what makes up a reserve asset. She asserted that she is confident no EU country will adopt it as such. While the ECB can't directly enforce this position, they can use tools like sanctions and fines to keep any erring central bank in check. Still in the EU, French authorities say they have opened up investigations into Binance for money laundering, tax fraud, and other charges. The move follows a preliminary investigation that kicked off in 2023. Authorities claim that these offenses were committed between 2019 and 2024 in France and the broader European Union. Binance, meanwhile, has denied any wrongdoing, adding that the issue was, I quote, several years old. Still, the firm had pled guilty to similar charges in the US in 2024 that saw its CEO serve a 4-month term in prison. The firm also paid a $4.3 billion fine as a result. Lastly, leading crypto research firm K33 Research has revealed that Norway's sovereign wealth fund, the largest sovereign wealth fund in the world, has seen an over 150% increase in its indirect Bitcoin exposure due to investments in firms like MicroStrategy, Coinbase, and Mara. The firm asserted that the fund indirectly held 3,821 Bitcoins worth over $350 million at the end of 2024, up from 1,507 Bitcoins in 2023. According to K33's top researcher Vesely Lunde, however, this indirect Bitcoin exposure was most likely the result of the fund allocating increased weights to these firms as they see a rise in value and not necessarily an intentional effort to gain exposure to the digital asset.